Today I have 8 things for you that you should be doing when you're using moving averages and things that you shouldn't be doing when you're trading with moving averages. I also included a lot of practical tips and tricks for you, strategies, entry situations, and a lot of things that will help you improve your use of moving averages. One of the best ways to use a moving average is as a trend filter tool, and I love this quote from Marty Schwartz, who was featured in the initial Market Wizards book and also has a great book on its own. It's called Pitbull Champion Trader. And Marty Schwartz turned 40,000 into 20 million US dollar. And he said, the 10-day EMA is my favorite indicator to determine the major trend. I call this red light, green light. And what this basically means is that you use the daily 10-period EMA, which is the green line here, and whenever the market is above the moving average, you look for longs. It doesn't mean that just because the market is above the specific moving average is that you automatically go long, but it is a filter. So what you do is that you use it to determine, are you looking for longs and shorts, and then you're going to time your trades into that direction. So for example, if we zoom in, this is the 1-hour chart, and the green line here is our daily 10 EMA. And what you see, first of all, the market is above the moving average, so you would only look for long entries. And then, for example, what you could be doing is look for consolidations, look for specific patterns, and then once the market breaks out of the patterns to the upside, that's where you look for long entries. So whenever you see a consolidation, that's where you wait for the market to consolidate, and then after the breakout, that's where you then look for trend continuation opportunities. So the higher time frame gives you the higher time frame trend direction, and then on the lower time frames you trade into that direction. For our second do, we are talking about momentum riding, and there's probably very few indicators or tools that are better suited for trend trading. Moving averages are the perfect tool to help you improve your trend trading. And what you could be doing, for example, is set up a channel. So as you can see here, I have 2 EMAs, both have the 8 periods, so they have the same length. One is applied to the high and one is applied to the low. This will give you the channel. And what you can be doing, for example, is look for a consolidation pattern into the tunnel. And then as the market breaks out of the tunnel, you could initiate a long entry. And then as long as the market is staying above this channel, you may hold onto your trades. And when the market dips into the other side of the channel, you can consider an exit. Alternatively, this can also be a great tool to trail your stop loss along the lower side of the channel. So this will help you ride trends for a long time, and if you catch a good trend, this may be able to help you stay in trades for a very long time and really get the optimal out of it. Moving averages are just amazing for trend trading. The third way to use moving averages is for pullback trading, and they're just perfect for pullback trading because pullbacks occur frequently during trends, and as we have learned, there are no better tools than moving averages when it comes to trend trading. So here you can see I have 3 moving averages, 8, 21 and 40 EMA, and what you can see is that during a trend, obviously the trend does not just shoot up in one straight line, but there's always this back and forth, and the market goes up and down. And the moving averages help you time your pullback trading. At different stages of a trend, sometimes the market will pull back a little bit, sometimes the market will pull back a little bit more. And what often happens is that when the market and when a trend is new and fresh, the market will pull back not to the deepest moving average, but it may stop somewhere before that. So here you can see the market is really nicely paying attention to the 21 EMA time and time again. Whereas after a certain amount of time, when the trend is a little bit more matured, the market pulls back all the way to the 40 EMA. And you can see we could have nicely found here a pattern as well. And then after the breakout, the market moves higher and higher. So as the trend progresses, you can see deeper pullbacks into the 40 are more common. When we zoom in a little bit, and again we are using 8, 21 and 40 EMA, you can see that as the trend progresses, there are pullbacks occurring frequently. And using moving averages is just a great way to improve your pullback trading because you can see how nicely the pullbacks react to the different moving averages. Moving averages are great as support and resistance tools. Why is that so? Because a lot of traders, a lot of programmed strategies, algorithmic strategies, high frequency traders, even sometimes financial media is talking about moving averages. And that's why they work so well, because a lot of traders are actually paying attention to them and using them in their trading. And in this example, I have used the 50 and the 21 period EMA. They are very commonly used, and when it comes to using moving averages as support and resistance, stick to the common ones. And in a moment, I will talk about what are actually the best moving averages and the best settings. But you can see here very nicely that the market is so often paying attention to those moving averages. They are just working so well as support and resistance. Here another example, we are using again 21 and 50, and you can very often see pullbacks, retests, and they are just great for support and resistance trading. One of the most important things when it comes to using moving averages is that you should be sticking to the common moving averages. And here are probably the most popular one, which is the 8 period, 21, 50, 100, 200. So those are really commonly used. There are obviously other moving averages that people use as well, but those are generally speaking the most commonly used. And when you want to use them, especially for pullback trading, support and resistance, momentum trading, or even trailing your stop loss, it is advisable to stick to the commonly used ones, because the more people that are using them, the more they will actually be respected. Now we're coming to what you shouldn't be doing with moving averages. And most importantly is that you don't use them during ranges. So moving averages, as I said a few times, are perfect for trend trading, momentum trading, pullback trading, but they just don't work as well during range markets. They may still work as support and resistance tools, as I've shown you, but you don't want to use them for trend finding, momentum riding, because what will generally happen is that in a range market, when the market is going sideways, just think about it, the market is going sideways in a rectangle, and the moving average, as the word suggests, it gives you the average. And where is the average in a range? It's always in the middle. So the market will naturally fluctuate around the moving average and not pay so much attention to it. Of course, you can see it's still usable as support and resistance, but you really want to make sure that you don't use it for any trend-related trading. And that's where they just won't work. Next, you don't want to jump around moving averages. It's very important to understand that nothing works 100% in trading. Everything will work sometimes, but obviously everything will also fail at other times. So what I've seen many traders struggle with is system hopping. So you may start using the 8 period moving average, and then you maybe have a winning trade, maybe 2 winning trades, but then there are maybe 2 or 3 losing trades coming around. And what you shouldn't be doing now is jump to the next moving averages, or look at your last trades and ask yourself, what moving average would have avoided those losses? And then you just keep using those moving average. That's really bad, because this is what we call system hopping. It's introducing a lot of noise, inconsistencies. And as a trader, what is really important is not obsessing about getting a 100% win rate and not trying to win every trade, but it's important to learn how to maximize your winning trades, which is why I talked about momentum riding and really riding those trends. And it's important to also learn how to take losses, because losses are inevitable. You will always, no matter how good you are, you will experience losses. So it's important to not try to avoid all types of losses, but it's important to just be very effective with taking losses and then moving on for the next trade and getting ready for the next winner that may be just around the corner. So those were the 8 do's and don'ts when it comes to using moving averages, and now I will show you how to set them up on your charts. I am using TradingView, and here it's super simple. First of all, we go to indicator, and then we just type in EMA, and here you can already see we have the moving average exponential. We click on it, and now we have it on our charts. And when we go here now to the top left, this is the setting icon. And if we, for example, want to set it to the first tip, which is the 10 EMA from the higher time frame, is we go to the time frame here and we set it to day, and then under length we set it to 10. This is what Marty Schwartz was using, and that's what I was explaining. We can make it a little bit thicker, and now you can see this is now the higher time frame moving average. And if you go to the 30-minute, to the 15-minute, the 5-minute, to the 4-hour, this will always be the same moving average. It will always come from the daily time frame, and it's always going to be the 10 period. Next, I was talking about the moving average channel, and for that we need 2 moving averages. First, again, we go to indicator, we type in EMA, exponential, and now we have 1 moving average. So if we want to set up, for example, maybe let's say the 10 period moving average, we want to have it from the same chart, And as I've shown you, to get the channel, you need to change the source. One has to be applied to the high. Let's make it a little bit thicker. Then we will confirm that. And now we have one moving average. This is applied to the high. Then we can copy this one. We go to the moving average, 10 EMA high. You can see it here. Then we go to the points. We go to copy. Then we paste it. Just press Ctrl and V like you would paste anything on your computer. Then you can see we have two moving average with the same settings. So we have to change that. We open the settings. And now we change it from source high to source low. And that's how we get our channel. And you can see this channel will never cross. And this is the one that I was referring to when it comes to momentum riding. So it's a very nice way to just improve your momentum riding. Other traders may use it for trailing a stop loss as well. And that's basically it. Higher time frame moving average, the channel, and the rest what I've shown you in the video is all very common and very basic. So you should be able to set this up. So let me know how you like this video. Let me know how you like this format. Do you want me to do other videos with the do's and don'ts, maybe for support and resistance, candlesticks, time frames? Let me know in the comments below and I will consider it.